Hello, everyone, and welcome to another episode of Financial Fitness. I'm your host, Jared Myers, joined by my fabulous co-host,
Keela.
Hello, Keela. Hello. And our special guest today, Keela, first of all, how was your weekend? It's good to see you again. You know, we didn't get to have you live on the last one. Sorry to cut this person off, but, we'll get to him. He's been here before. He's a well-known guest. Go ahead, Keela.
My weekend was great. It was very relaxed. Didn't do much of anything. We had a little bad weather to come through this way, but other than that, we were good. We had a beautiful Sunday.
Awesome. Well, this next gentleman here really needs no big introduction. However, the colossal clout, if you're familiar with Sandlot, I've got Chandler Artis back on the line here today, guys. Chandler, thanks so much for coming back. Good family friend, good friend of mine that also is a manager in the credit union realm, as we spoke about. And again, Chandler, glad to have you back.
Oh, thanks for having me.
Always,
I appreciate it.
Always a pleasure.
Yes, sir.
So, these last few episodes, we've been talking about spend, save, investing. We've been talking about life during the pandemic. And, with the way things continue to move for the average individual that we usually see and kind of routinely run into, I kind of want to get y'all's perspective on what life is going to be like after this pandemic. What do we see moving forward? What do we see from a retail credit borrowing side, Chandler, that you may see? And then Keela as well, from your perspective, what is something you may see from a business side where you see things kind of go into an adverse effect and see a boom, or maybe it's a bust. I'm going to go, we'll open the floor for you, Keela, kind of see where we start from a business side. And Chandler, definitely feel free to come on in. And then we're going to go from the personal side and see where Chandler's aspect kind of can really hone in on some of those things I think that makes a difference.
Yeah, so from the business side, I actually had a good conversation with a customer today about this. He was in business a long time ago. He's no longer in business, but we were just talking about how the pandemic has really just really opened some eyes to show a lot of different things. And we were talking about the restaurant business in particular. And he started out with the question. He asked me what were the rates we're doing. And of course, we all know the rates aren't doing pretty much at this moment. And I told him, I was like, we're still offering the same thing across the board. And he was like, well, yeah, and I apologize. I was like, I'm sorry, how the economy is. And he was, he was just basically saying that a lot of business suffered because they had really they weren't prepared. And a lot in retrospect, just thinking about it, no one was really prepared. Even the most successful or the most prominent business just simply was not prepared for anything like this. But I really think that the rebuilding of the economy from a business aspect is going to start with the small business sector. Over half of the Americans that are employed work for companies that have 500 or fewer employees, which tells us that, that leans more to the small business aspect. And I think in order for the economy to regain and be able to grow in that area, it's going to start with the financial sector, the banks, being able to offer something to help the small business, if that makes any sense. So it's going to start with us, the banks, creating those products, making banking essentially easier or more favorable. And I use that loosely. In
the regulations.
Creating something, in hopes of creating something for those small businesses to rebuild. I was reading just like some statistics in an article today, and they were just basically they broke it down about a lot of the companies that kind of suffered during the first half of the pandemic. There was like a 22% overall decrease in the as far as small businesses go. Did you guys know like the estimate of whether businesses were gonna bounce back? They're looking at like 80 to 160,000 small businesses to be closed permanently, like not to open back up. And a lot of those, unfortunately, who fell in that category were a lot of small businesses, because that's what we're talking about. And unfortunately, those non-white business owners. You have like Latinos. I think they were down like 32%, and African Americans were down like 41%. So I'm thinking that it's going to be more so on the banks to create products to help be able to create that extension of credit to these small businesses.
That number right there, that 80 to 160,000. I think when we were in the car chandler, we kind of spoke on that from the personal side. So now you've got these businesses who won't be regaining back any type of business per se if they're looking to shut down. What happens to the personal side for somebody who was looking to get established, build their credit, get things ready in order to kind of be on top in 2020? What is some of the things that you kind of see moving forward affecting this now?
Yeah, so a big one is just going to be all these small businesses that are going under. Obviously, they're not going to be around. They're not going to have that employment anymore. So they're going to be losing out on that paycheck. A lot of people weren't having that established credit already. That's something you see a lot with younger kids coming out of high school, coming out of college, have zero credit. They're trying to get into the workforce, and you're in that small business where you have all the opportunity beforehand. Now those small businesses don't have the opportunity. So that's a big one, is the employment. You're having trouble finding jobs. If you don't have jobs, you don't have the income. If you don't have the income, how are you supposed to get approved for a loan? So, a lot of people that didn't have the family or the parents that were able to co-borrow or co-sign with them, get them involved and establish that credit early on, you're kind of at that downside now where it's tough to do it by yourself individually.
It is. And I think we run into people that we see from both perspectives. Now you have people that were in a position, they're preparing, they're doing everything right, and then boom, now they're not ready. Now it's, okay, how do I restart this process from a personal side? Do I have to work multiple jobs? Do I have to find the steady means of income? Like, what is it going to take for me to get approved now if my employment had to end and I did end up getting a new job?
Yeah. So, the good thing about the credit union I work at is we do take all that into consideration when we're working on loans for them. We're going to look at your credit report, obviously, look at the score, just get that history and see what was going on there. But, we understand what happened. So, a lot of people were infected by the pandemic. A lot of people's employment was affected by it. So it's something we're going to look at. We offer a bunch of secured loans, secured credit card, things like that to help establish the credit or rebuild it if you're in a point where you don't have that credit where it needs to be. We have a bunch of debt consolidation loans is another thing you can look at. So trying to use something that you already own. So doing an equity loan on your home, if you've got that established equity, which right now home prices and home values is just through the roof. Yes. So, it's just crazy the amount of equity people have in the house that they don't even know about. And a lot of people, they hear that and are like, oh, don't want to get a second mortgage, don't want to tie my home up. That's the thing that has the most value in your whole life. Why not use what you own, use something that you already have to make your situation better? It's just a no-brainer in my opinion.
Wow. Yeah. Wow. I like the way you said that.
Yeah, I love that. I love the way you just said that. Historically, the way to even build wealth was literally starting with home ownership, owning your own home. So you hit the nail on the head when you said that. Like, a lot of people are going to have to look at that, use that from a personal perspective, that as leverage. One thing this pandemic has done, though, you guys, it has essentially, in a sense, leveled the playing field, because we all are at this starting point of trying to figure out how do we continue to move forward. And it's those avenues, as Chandler just stated, that, in a sense, no, I don't want to take out a second mortgage, but if you want to amend, then this is going to be a good starting point. And as history has shown, home ownership, it was the number one way to create wealth. So,
and I want to take that same point, Keila, that you just mentioned, and throwing it back to you from a business perspective. This is the time where people who can build themselves, if they have to take that second mortgage and they don't want to work, they do want to start that business. Here's that same time. Like you said, it's level playing field from people who can still get the PPP to people who are just now being able to qualify for loans because of the position that they found themselves in, never borrowing prior or just now getting credit cards. Now, where do you look to go first? Do you look to personally get a situation where you can be in a quality position to receive a loan, receive anything in that position? Or my credit's not that great. We've had tons of people do this. PPP, I want to start a business. I want to get these funds. What's the difference? And I'll let both of you guys chime in there.
Well, as for me, in my opinion, that's going to be a person-to-person or individual-to-individual scenario. And individuals are going to have to really, really focus in on what's going to be the better benefit, what's going to benefit them the best. What you don't want to do is go with the mindset, I'm going to go and create more debt for myself, especially in terms of thinking of the PPP. You need to have a good understanding of what their payroll, the rules in regard to that payroll protection plan. However, the SBA also have loans out there for startup companies. There are other products out there. I was reading something, and it was saying Bank of America is pledging like $1 million to start up small businesses or helping ones to recreate or rebuild, rebrand. Because a lot thinking in terms of to meet that whole expectation of what the CDC rules and guidelines are now. Some people are going to have to restructure their business. So again, it's going to go back to, even from an individual perspective, even if you want to start, it's all going to start with, it's a case-by-case scenario, and you're really just going to have to look at what's going to be most beneficial to you and what's most practical without, especially if you're looking at a perspective of my credit is not that good or I'm just getting into a good position. You don't want to go out here and create a wealth of debt for yourself, especially in an economy where we're just now or post-pandemic years, I'll say that.
Okay. I think you bring good perspective. Chandler, what do you have to say to that?
Yeah, so, I mean, we don't handle a lot of startup businesses. That's one of the things is just being a smaller credit union. Our business side's not as big. We do have a lot of people that come in, they're like, hey, what can we do for a startup? And if you can't take out a personal loan, then we don't have a lot on our side. Usually you have to be in 2 years tax returns is basic for our commercial banker to be able to do anything. But we do have the personal loan option that we're able to do, back to the equity loan, back to just an unsecured personal loan. We also have some great credit cards that we're able to offer. But yeah, it just like Keila said, it just comes down to a case by case. Yeah. What's going to work best for that individual as to the means to get their business up and running in a way that's going to be able to make them money. There's always going to be some sort of risk if you're doing, your own business.
Absolutely.
Doing a small business. It's not something that everybody can get out there and do and be successful in right then. It's going to take time. You're going to need to plan. You're going to need to know what's going on. You may have to, tighten that belt a little bit for a while, maybe cut back on some costs.
Yeah.
And then with how the pandemic is, everything's going to move more towards, being able to do it virtually, doing it, not having to be in that brick and mortar if you don't have to be. Mm-hmm. That's what I'm seeing a lot of now. And before I was at the credit union, I was working at another bank doing merchant and doing treasury. And that bank had a lot of things set up, which probably benefited all their businesses because we tried to have it so they didn't have to come to a branch. We tried to have it so they could do mobile deposits, do their credit cards, do everything from their business and not have to bring deposits into the bank, not have to worry about the merchants coming through. So I think we're going to see a lot more of moving away from having to bring deposits to the bank if you don't have to, moving away from having to have customers come to you and see, person to person, and move more towards that online side if that's an option for that type of business.
I definitely agree with you. You're gonna have those personal bankers that, like you said, everything is moving towards that digital. Exactly. That digital experience. Yep. And with people who don't want to come in more, people who are wanting to understand more about building credit and things like that, that's going to have to be available online. Mm-hmm. So not just banks in general, but like you said, what information is it being offered out there that, okay, what's the best option for me? I want to buy a house, but my credit score is not that great yet. How can I get prepared to be that? Or I'm ready to purchase a house. I don't have any money down. There's programs out there. Mm-hmm. I think where we're going after this pandemic is going to be a very slow but very steady growth, in my personal opinion. I do see a lot of things rising back up immediately and quickly, as we've seen on the market side. But you've also got to look at every perspective. But more so individually, the financial fit aspect of it is the person-to-person, case-by-case scenario, exactly, as we just explained. How do we find a way for these next 2 to 3 years? What is some recommendations that you would give people who just preparing to, like I said, just whether it's build credit, buy a house, save? What is the biggest aspect that you think is going to be the biggest difference maker? You and Keely, what do y'all think is going to be the biggest difference maker in a personal side of borrowing, and just in as well as business side? Like, what are you going to see as the biggest aspect as things occur?
I think it falls back to the old adage of when's the best time to plant a tree? Yesterday. So, I mean, if you're going to start saving, if you want to buy a house in the future, if you want to get a loan in the future, the time to start trying to make sure you're in that right mindset and, be able to do that financially is right now. You just got to start savings. You got to start, looking at your credit, seeing what you can do to build the credit. Because if you're going to try to wait until you're ready to buy a house to find out that your credit is not where it needs to be, it's the worst time to be able to do that. You need to be planning, and we've seen how the market goes. We've seen how everything is right now. Rates are pretty much an all-time low. I mean, you're not going to find loan rates better than what they are right now. So there's no way, no more room for them to go down. Rates are eventually going to go back up. So if you're going to do some sort of loan to build credit, right now is the best time. And you got that little bit of interest that you're going to pay back, but that's going to build that credit. Yep. So if you've got the option to do a savings secured loan, a savings secured credit card, if you're able to do an unsecured loan, just something to have on that credit, make sure that you're making those payments. Obviously, you want to make sure that those loan payments fit in your budget. Don't overextend yourself just thinking, I got to get something to get on the books. Yeah. If you're not doing it right, it's just going to hurt you more. Agreed. But just doing the correct planning, making sure that you start now if it's something that you want to do in the future.
Okay. Yeah. Awesome.
Absolutely. Everything that Chandler just said, it's all about, and it really goes all the way back to what we constantly talk about as far as being financially fit. In order to be financially fit, there's some planning in that. There's, of course, you're constantly reviewing and going overtime to see, making sure that your everything is lining up. And quite naturally, we know everything isn't going to be perfect, but the idea is to become disciplined in your finances enough so you'll know, okay, this is my objective. And in order for me to get to this objective, I have to meet, points A, B, and C, but I have to be consistent across the board, not consistent for a month or 2 months or what have you. It's all about, and here's the idea, and here's the key. It's not just being disciplined just enough to get you to the objective. It's about being disciplined to enough and creating a habit and making it a way of life so you can maintain after you meet that objective. If you're trying to buy a house, you need to make sure that your mindset that you're catering to as far as your finances go is going to help you be able to keep your house. Because you can meet the goal, you can get the house, but it's also about keeping the house as well,
I agree. Sorry, just got a little caught up in the moment right there, just thinking about my next question I was going to go for with you guys. So short-term and long-term aspects. We do talk about what's best about giving back to the people that invest with us, the people that or listen to us talk about investing, the people that listen to us talk about this show itself, but also where are y'all's goals and where are y'all looking to over the next few years personally? In your opinion, where are you looking to place majority of the money you're building up, and where are y'all looking to place that?
Yeah, so a big one for me is home. The house I'm in right now has appreciated a lot. Next step is to take the money that I'm going to profit off of that, purchase the next home. Like I said, I'm big on the equity side. If you can have equity in your home, you're going to be able to finance whatever you need to finance for the rest of your life. So you're looking at that, being able to buy a home that has more value, being able to put money into the home to gain more value is one thing obviously I'm going to do. Another thing is going to be retirement accounts. Make sure that I've got my IRA how it needs to be, put aside some of my paycheck in that 401k, any other stocks as well, just making sure that I'm trading and putting aside money for the future. Because while there are needs that I have now, nothing's more important than having that future, setting it aside for my 10-month-old and the future kids I may have, I want to make sure that they're also going to be set for life. So not only, looking for my future, my wife's future, making sure that my whole family is set. And like I said, that's just all long-term looking at that, making sure that you have the home how it needs to be, making sure you have the retirement account set up, and, saving as much as I can.
I like that. Keela, what about you?
That's pretty much the same. For starters, for me, I would say my short term. It's kind of long, but my short term is basically purchasing a home. That's what I've been working on so hard, especially with a lot of people, and it's something a lot of people shy away from talking about. I went through a divorce, so I kind of had to start over, take a step back and regroup. I went from having a 2-income, household to one, and it's just me, So I had to refocus, plan, and now I'm in a good position. So the idea is, for me, short term, is to get in a good place so when I get ready to purchase my home. And for myself personally, I want to build. A lot of people are like, well, first time, this stuff, do you really want to do that? But I know that's something that I start to have. So it's all about creating a plan. And I may not be able to build straight out or something like that, but that's a goal. So in short term, I'm saving. I've created a strict financial budget. Literally, I said just this week, starting today, no more eating out at all during the week. That's cut out.
I fail every time I say that.
And I try, but if you have to continue to make that conscious effort to do better. My mom called and asked me something. I was like, Mom, it's not in the budget. I can't, I gotta wait, and we chuckled at it, but I have to do that for myself in order for me to just get myself in a habit of not doing something on a whim or saying, oh, I can move this and I'll put this back. That's the worst thing ever. Don't do that. Stick to your budget. So for a short-term goal right now, it's, of course, purchasing a home. Long-term, I have been chunking away at my retirement, especially right now. I'm in a good position to do so. So, just learning how to increase those, my contributions to that, to my retirement long-term. And like Kendall said, I purchased some insurance, some policies or what have you, because now I'm looking to making sure that the boys have what they need, and they'll be able to, when they go off to college, they won't have to worry about the things that I have to worry about, for sure, long term. So, and creating something. And third, my family, we're kind of starting up a little business startup. So we've been kind of investing, my siblings and I, we've been investing in that, or what have you. And it's going to be really, really good. I think it's going to work out great, so that's what we've been doing, right now. So home, retirement, business, or home, business, retirement,
Oh, yeah. And folks, there you have it. As far as being financially fit, it's a process. You take your time, you get organized, and you set a plan. You work to achieve that plan day by day, night by night, whatever time frame and whatever period it may take you. Just speaking to these two young individuals, we sit here, everybody's situation is different. Everybody gets in shape in a different way, and everybody's motivated by a different thing. To say on the course of the last lines to kind of wrap up here, I'm very in the same boat with both of you guys. Equity is in my home. I'm definitely looking to do the same thing long term. I don't have anybody to leave it to, though, yet, Chandler. So
leave it to me. I'll take it.
So, we're definitely focused on that. Guys, thanks so much for tuning in to Financial Fitness. I'm your host, Jared Myers. I'm going to let the other two sign off on their own.
Thank you for having me, Jared. It's always fun coming over here.
No problem, Chandler.
Yeah, anytime.
Always.
It's always a pleasure, Chandler. It's always good talking to you.
Yeah, you too, Keela.
In that other half or that other realm, I like hearing all this good stuff. And as always, folks, I bring you greetings from old Mississippi. Y'all have a good night.
All right, have a good one. Thank y'all.
Thank you.